All right, quick little premium video for you guys. Before we get started, I'm gonna dry scoop this fucking creatine. So I'm lifting after this. So I'm fucking jacked. So we're gonna get this down the hatch. Fuck. Okay, nobody saw that. Holy shit. Oh my god. Alright. I dry scoop my creatine powder. People think that shit's crazy that they put it in water. I just dry scoop it. I really made you guys watch a minute of that. Alright, so here's the thing. There's been a lot of talk about how I use intermediate highs and lows. I mean, there's so many different names. Sponsored, protected, intermediate. It's just a higher low inside of a higher time frame fair value gap. And let me tell you guys, these things are fucking beautiful. Okay, so let's talk about how I was able to abuse them for today's initial move and today's reversal move. Both moves that happened today were off of those highs, right? Highs and lows. So obviously, first thing I want to do is always go and get my bias. So what does it mean to be a intermediate high or low? That's just what I'm going to refer them to as intermediate, okay? You could say sponsor, protected, they're all the same shit. This is a intermediate high or low. So I always want to go on the 1 hour and 4 hour and say, where are intermediate highs and lows, or highs and lows that we could potentially hit that are inside of gaps on higher time frames. So the first ones that come to my mind were these pre-market intermediate highs with this 4 hour, and then this 4 hour above, as you could see, it's in a 4 hour gap. And then my main target was London high at open, because it's an hourly intermediate high. So how do I use intermediate highs and lows? I use them for two reasons. I use them as targets for draws and liquidity, and I use them as key points for reversals. Because I'm telling you guys, if you sweep a intermediate high or low on the higher time frame and you get an external SMT, that shit is going to bank. I promise. For at least 20, 30 points, like at least a quick little scalp, that shit works a lot of the time, especially if you're delivering out of so many key arrays, especially if you're delivering out of a PD array from a different, from, ES, for example. But also, the thing that makes it even higher probability is if it's a key level anyway. What I mean by that is this isn't any random high, it's London's session high. So obviously everybody wants to see us sweep London and get shorts anyway. But the fact that London is now the swing high inside of a fair value gap, so an intermediate high isn't any high of a candle. It's just when we make a swing high. I mean, if you look at this gap right here, this would be an intermediate high. You look at, fucking, let's see. I'm trying to look for like an example. Like this is an intermediate high. We come up, we take it out, and then we get a reaction off of it. Shit like that. So we're almost always going to get reactions, but if it's just any random low and it's not a swing low inside that gap, then that is not an intermediate high or low. Now let's also talk about what I was looking for later. I wanted to see daily lows get hit, and I know you may be saying like, oh, whatever, we just watched your trade recap video. Do we really need this? Yes, because I didn't really fucking zone in on these as much. What was catching my eye to the downside? Hourly gap, two separate lows inside of them. So I wanted to see these lows get ran so that we could take longs, or London high get ran so that we can take shorts. And I actually had a bullish bias coming into today, so I wanted to see this 15-minute below get respected. What do you see? We respect it and then immediately hit London. Now, London high as a intermediate high or low as a draw following your bias, I mean, I literally could have just entered long at open. That's how fucking confident I was. Like, I literally could have just entered long at open and just banked 70 points. Or waited for the manipulation, not even waited for an entry, and then just banked a quick scalp. So that's how I use intermediate highs and lows. I use them as targets for my draws and liquidity for my play. So if I were to get a gap here, which sadly I couldn't, I would go, okay, stop below the low, 1-to-1, right to London, and it would have printed. Sadly, no gap here today. But what else? What happens after we hit London? So this was weird that we didn't hit Asia on either asset or this high. But look, we come back under London. We inverse this 1 minute. Shitty reaction, so I wasn't going to take it. But where do we sell off to? All right, now let's pause. Where do we sell off to? The hourly intermediate low. And what happens after that? Oh, we reverse and we get a long now. Okay, now we have a long opportunity. You go in the 30-second where the initial long was. Right here. You mark out a liquidity pool, a draw on liquidity. Oh, this is an unfilled 5 minute, this high. And we fucking run it. So, as you can see, if you look at the lows that I marked out, we basically ping pong. We go boom, then we come under, and then we come back up. And then what happens? And then we retrace off that 5. This was the short I ended up taking. And then after a bit of time lagging around, we get this, new pump up to rebalance the leg even more. What do? We run the lower low. At least I think we do. I don't know. I didn't even check, actually. Maybe we don't. Okay, we don't. I'll just fucking go fuck myself, I guess. But, how do I delete this? So these levels can act as such great resistance. And this long was beautiful. The only reason I didn't take it is because I thought we would also run this low. But you snooze, you lose. I guess I'm just a fucking idiot. But, I mean, bro, these as targets and points to take reversals off of are so money. I just made videos where I referenced them in premium, and I said to myself, so these videos, price action, how to avoid pattern trading and drawn liquidity, and then also drawn liquidity full breakdown. I talked about these. I can't stress enough how much you should be marking these out pre-market. 9:15, you should go on the hourly, 4-hour, and daily and try to find these targets. And then if the bias plays out in whatever direction, I guarantee you a lot of the time the bias is going to play out until we hit at least one of those intermediate highs or lows, typically. And then if we get a reaction and a setup off of those, then take it, assuming it's in context, shit like that. So that's why they're so important. Magnets for price and great reactions. But yeah, as always, just a swing high inside of a fair value gap or a swing low inside of a fair value gap on the hourly, 4-hour, 15, daily. The 15 is where it gets a little sketchy, but it's still valid technically. And then as you can see, we make this move up. I don't even know what happened the rest of the day. Then we finally hit this next internal high or intermediate high, and then we just chop because who the fuck trades PM? But yeah, so that is kind of how I look at them. They're really, really great targets and draws on liquidity. Like I said, great way to use liquidity just as ping-ponging the market. Like, okay, we're probably gonna, if my bias is bullish, I want to see us at least run London. That's what I said, because London was the most obvious and the closest intermediate high today. And I said, listen, if we could just get longs at open, that would be beautiful. And we manipulated, sadly, just didn't get the gap. And then what do you know? We V-shape off it. And then what do we go to? The next intermediate low, which then reacts again. So these guys are super powerful, without a doubt. And they will help you bank as long as you use them within context. Now, are we going to open up and immediately go to the intermediate high and then short off it every single time? No, you need to know, the broader context, your daily buys, stuff like that. And for that, I would say watch my video on, dude, I hate doing this. There's got to be a better way to do this. Like a daily bias. Fuck me. Okay, there's not. I promise I'm going to find it. Fair value gaps for time frame bias, drawn liquidity, and external and internal SMTs for bias and entries, and identifying bias and drawn liquidity. So my first 3 videos will help you to find context and bias in the markets pre-market, because I always do my pre-market analysis at 9:15, and then what's it called? Fucking figuring out intermediate highs and lows, marking them on your chart, and then connecting them or using them with it will be money. As you saw today, I said we reacted off a 4-hour. Only trade I'd take it open is a retrace to that 15-minute with an SMT. Would love to catch longs to London. What do you know? Right it open, we retrace with an SMT, and we long to London. Wow, I'm a genius. And then would love to catch longs to London and then potential shorts off it to rebalance the leg. We just didn't have a good reaction, but shorts did happen. I basically perfectly predicted this. And then I don't think I said anything after that. If we dump it open, I want to see those daily lows get hit and the 15-minute get inverse. My confirmation for bearish. And as you can see, once we started selling off today and inversing this little ass bearish gap that we tapped it open, where is it? Where the fuck did it go? What the fuck? Am I tripping? Bro, there was literally a 15-minute gap. Whatever. There was some pre-market gaps, and we inversed them to the downside, and then we're going for those daily lows, retrace. That was my external draw for my trade. So yeah, very, very easy. Once you get into the swing of things with finding out draws on liquidity and how to use them and ping pong them, you're going to be fucking set. Those intermediate highs and lows are a great way to do that. So yeah.